JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 12th of March 2021. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always guys, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which if you can click here on the top here to the research page, it will take you to the our website, which we update on a daily basis. So yep, feel free to check us out here. We're currently preparing the daily report, so yep, you can check that out in about an hour and a half. But yep, guys, I hope you find something useful here. I believe so. But yeah, you can always have a look at jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I'm going to pick up here is Nikkei 225. So the index is closed, and it managed to close nicely here in the positive territory. So it pushed higher, it made its way above that 21-day EMA, and yep, it kind of ended the day near the crossing here of these two lines. The short-term downside resistance one taken from the high of the 16th of February, and the medium-term upside line here taken from the low of the 30th of October of last year. So also the index managed to close the week in positive territory. So in a way, this of course doesn't really make it clear, I would say, because we are still stuck below these lines, or should I say actually kind of bang on these lines. So that's not really kind of giving us much, let's say, much clarity, because still for me to consider the upside, I would like to see a stronger push above all of these lines here, and then a push above the psychological 30,000 mark. This way kind of I could get a little bit more excited with the upside. But again, looking at this picture, I mean, for now I would say that yes, be very careful. Yes, there is a chance for this one to move higher, given the kind of the positivity that the markets kind of received from the whole kind of stimulus bill that was passed through Congress in the U.S. So yep, the Asian session picked up on that positivity. However, there are still a lot of obstacles on the way there, and although yes, everybody was anticipating that this will kind of create more positivity. Yes, it did so, but how long will that last for? Well, this is what we'll have to just leave it for time to kind of to show and time to tell. So yeah, long story short, for now guys, looking at this technical picture here on Nikkei, if you want to go for some higher levels, well, probably wait at least for a push above that psychological 30,000 mark. But for the downside, well, I hope this scenario is going to work out. I mean, it would be nice to see maybe a bit of a larger correction here to the downside. However, again, now the market doesn't always do what we want it to do. So if, in a way, long story short, for if you want to go for the downside, well, probably wait for maybe at least a drop back below the 28,980 territory, somewhere around here. And then yes, we could go slowly aiming for these this level here, the 28,325, or below that. So yep, let's see how that's going to play out. Now Shanghai Composite, and here you can can see that the index did rebound, did push higher, and did close in the positive territory today. However, still remained below this downside line taken from the high of the 18th of February. So in a way, although yes, there was a bit of positivity here, still the index remained below this downside line, which is kind of a bit worrying, I would say. And looking at the weekly candle, it still ended being in the negative territory. So for now, basically, I'm gonna stick to the downside idea still on Shanghai Composite, but only if this downside line taken from the high of the 18th of February continues to provide resistance. If it fails to provide resistance and breaks, then I'll take it. I'll take a bit of a neutral stand. But if the index starts popping above the 3,542 territory, somewhere around here, now that's where it could become a little bit more interesting for more buyers. German index DAX, so yesterday pushed nicely to the upside. However, well, I would like to consider this to be a little doji here, but it's not really ideal doji. It still has a bit of a body here, so I mean, it did end the day above the yesterday's high, so in a way there is a bit of positivity that there could be some more higher levels in the kind of in the works here. But again, if you want to aim for some higher levels, guys, well, probably, again, because we are at all-time highs, always wait for a break of the kind of the previous the high, and yep, then we could go for some higher levels. This is what I said to you yesterday as well, and yesterday I said that if we get a push above this area, then yes, a further move higher could be possible. So we managed to reach yesterday the 14,595 territory, so just kind of fell shy by 5 points from reaching that 14,600. So that's going to be my level for today. If we're going to get a push above this area, then of course I'll start looking at some higher levels. But if we struggle, then I'll keep a close eye on this area. This 14,475, but to be honest, even before that, I will keep an eye on yesterday's low near the 14,515. So maybe a nice good drop below yesterday's low could kind of present a nice opportunity here for the sellers, and we could see the index maybe correcting to the downside. So let's keep an eye on that one and let's see how this is going to play out. But again, we need to be very careful because yes, although the trend for now is still to the upside, but given that we are kind of hitting all-time highs every day this week, so yep, we'll be very careful today as well. Maybe we'll hit a new all-time high today as well, but will it stay? If we do hit a new all-time high, but if it struggles, let's say for example, to stay above the 14,595 territory, now this is where it's going to be very interesting, because then probably maybe the bears could kick in and drive this one a little bit lower. But let's see how this is going to play out. S&P 500 yesterday created a new all-time high, pushed higher, and I mean, this idea that I talked about previously, that if we get a push above that 3,904 territory, then yes, I'm going to aim for some higher levels. I'm going to aim for that 3,950 territory. The index, as you can see, managed to reach the area around the 3,960 level, so approximately around there. Yeah, I mean, for now, look, this whole kind of momentum is still to the upside. But if we take a look at the cash index right now, we'll see that the price is actually drifting back down. So currently the price sits around 3,933 marks, so it's even below yesterday's close. So this is going to be very interesting. So let's see if we can actually push again to the upside today. If we cannot, then maybe a bit of a corrective move here back down towards this downside line taken from the high of the 16th of February, which we've managed to break this week, could be possible. So we could see maybe a move back down here towards this downside line. or even maybe the 21-day EMA, depending on the strength of the bears, of course. But again, for now, I mean, long story short, basically the fact that we are currently trading below the below yesterday's close, that's kind of a bit of, I mean, worrying. Also, given the fact that we had a decent up move already this week, so maybe a bit of a setback here could be possible. However, if it starts jumping back above this 3,950 territory, well, I mean, this could lead to the upside again. DXY very quickly on that one, beautiful rebound here from this 100-day EMA, and well, that's happening kind of today, but yesterday we dropped below that 91.60 zone. Everything was kind of looking quite interesting here for the sellers. However, this is the point where, I mean, we need to be very careful, because for example, if this index now travels back above the 91.75 territory right here, this of course kind of could bring the bulls back into the game here, and potentially driving the index to the 92.50 zone. But again, for now I'm going to be very careful with this, because it's a very tricky spot here, and yeah, I mean, we could draw this upside line again, but to be honest, I mean, it has been broken, so no longer kind of needed. The main focus right now will be on some of the key levels. Now for the downside, probably I would need to see this one dropping back below the 100-day EMA here to be a little bit more on the safe side, and this way, yep, I could go for lower areas, initially aiming for the 21-day EMA and then maybe further down. But again, I will pick up on this one if we do, I mean, if we do reach the 21-day EMA, I'm going to look at it again, because again, I don't want the situation where I mean, we're going to have a nice rebound here from this 21-day EMA and then push higher. So, but again, that's possible, so also keep that in mind. But it is a little bit confusing situation here on DXY. So if you're not comfortable with this right now at this point, I mean, that's fair enough. I mean, that's understandable. But let's say what you could do then, if you could just wait this one out and wait maybe for a push at least above the 92.50 zone. This way, a break above this area would confirm a forthcoming high, and more buyers could join in. For the downside, as I said, wait for a drop below the 100-day EMA here, shown as the green line. Then the next target will be this 21-day EMA, and then we'll take it from there. Jumping into gold very quickly on this one. Gold is drifting back down. I mean, look at this beautiful move, guys. I mean, this week I talked about this 1740 territory, and this worked out beautifully. So we've managed to get a push higher this week, a bit of a retracement, so that's quite healthy. But as I said to you in the beginning of this week, if this hurdle, the 1740 territory, does provide good resistance, then we could see a nice slide here back down. And this is what's happening right now. Now we're drifting back towards that 1704 zone, but if that gets cleared, my next target is this upside support line drawn from the low, the 20th of May of 2019. And then we'll take it from there. But for now, like I said, everything is working according to the plan. Beautifully, just perfectly. We had a just bang on test of this 1740 territory, and yep, now we're seeing a bit of a decline. WTI Oil. This one is a bit of a mess because, again, there is uncertainty with DXY, where it wants to go. With WTI Oil here, the fact that we've managed already to kind of reach these levels here, the highest point of 2020, the highest point of 2019. This is where the commodity is currently stuck at. I mean, it's stuck in between those highs, or actually it has now drifted back down a little bit. Yes, so it's drifted, fell back below the 2020 high. If by any chance this commodity kind of drifts back again below this 65.62 territory and stays below this area, then, well, maybe we could see that little correction to the downside here towards the 21-day EMA, or even this upside support line. For the upside, what I would need to see here is basically I would need to see a push above the current highest point of March near the 67.94 zone, and then I could go for further upside. So be very careful with this one. Okay, Bitcoin. Bitcoin is, wow, I mean, quietly just drifted, crawled back to its all-time high tested that, and today we're seeing a bit of a corrective move here to the downside. However, this is where it's going to be very, very interesting for the buyers. I mean, will we actually get a nice break above this barrier? I mean, if we do, then of course higher levels could be met. This will confirm a forthcoming higher high, and more buyers could join in. But yeah, guys, I mean, this 58,321 territory is something that I'm going to be keeping an eye on. That's roughly the area around there. That's yeah, that's going to be very interesting to see if we're going to get a break above it. For now, I will say that I'm going to be careful. Of course, I'm going to be careful because if somehow this area does provide resistance, and we see then the crypto drifting lower here, maybe it could lead to a bit of a correction here to the downside towards this upside support line taken from the low of the 28th of February. Now, something that I also wanted to kind of pick up here as well. If, let's say, this drifts lower and corrects lower and then eventually breaks below this upside line, below the 21-day EMA, yes, it could drift further south, but again, probably the sellers should not be too excited yet because, and let me just mention this, this is something that I don't really like when instruments do form, and these are ranges basically. So again, if this ends up drifting lower, and breaking this little short-term upside line, then maybe it could open the door towards a test of this little area right here, roughly around the 43,777 mark, approximately around there, guys. But basically, I'm just keeping an eye on this whole area, because if this area holds, we could see, and then we see a nice rebound again, then yes, of course, this confirms a nice range here, a very wide one, and yeah, I mean, then we'll have to just wait until we get a clear breakthrough one of the sides here before kind of, let's say, examining the next directional move. Yeah, guys, I mean, from there, I mean, we'll take it from there, of course, and for now, basically, that's the kind of game plan. For now, of course, the main story is, the main kind of point here is to watch this all-time high. If that gets clear today, then yes, of course, this confirms a forthcoming higher high. It goes for the all-time high then again, and then, of course, the sky's the limit. Then, of course, we do have that psychological 60,000 territory, but maybe if it pushes higher above this, maybe 60,000 is not really going to be enough to halt the acceleration. But let's see how this is going to play out. For now, like I said, I'm going to keep an eye on this barrier, because if this continues to hold, and this could lead the crypto to the downside here a little bit towards this little correction, and then maybe even a test of this, let's call it this, the lower side of the range. I can see in the chat room Nasdaq. If you want to join, I'm not gonna pick up on Nasdaq right now because I've already kind of picked up on a few instruments. But if you want to join my Traders Tea Time later on, yep, this is where I was planning to pick up on Nasdaq. So yep, join me then, 13:30 GMT, and I'll have a look at Nasdaq for you. Now, jumping into a few pairs. Also, before we actually continue with the pairs, the economic calendar here today looks quite interesting. So, first of all, of course, the main point here are the GDP figures from UK. So the GDP month-on-month figure came out much better than the forecast. However, still came out worse than the previous number, and the year-on-year number disappointed. It managed to kind of fall even more, and did miss its forecast, and of course missed the previous figure as well, so it came out at minus 9.2. But I'll get to GBPUSD in a bit. AUD and ZDs. This is something that I've mentioned throughout this week, and AUD and ZD was the pair that I was keeping an eye on. So basically, the idea that I've mentioned, that if this 1.0771 territory breaks, then of course this opens the door towards a further move higher, where my next target is this downside line taken from the high of the 19th of January, or this 1.0828 zone. So yesterday we had that pop, we had this break above this barrier, so great news for the buyers, and yeah, I mean, now we're seeing this further move north, so let's see if we can reach this downside line. If the pair somehow starts falling back below this 1.0771 territory, this is where I'll become a little bit more cautious, because again, this could lead to a bit of a larger correction to the downside. So be very careful on that one. So as long as it remains above the 1.0771 zone, there is a good chance for this one to push further north. USD and USDJPY. So well, I mean, look at this beautiful move here. So yesterday we violated this downside line, but stayed below it, but didn't really kind of drift lower. So today we're seeing a strong push higher, and now we're aiming for this current high of the this week, near the 109.23. So if that gets cleared, if that gets broken, then of course my next target is the highest point of June of 2020, and that's roughly around the 109.85 territory. So let's see if that level can be reached today. In terms of the US data for today, we just have the PPI figures from the US, so yeah, we'll keep an eye on that one. But again, for now, you can see that this pair is popping higher. So let's see if we can clear the current highest point of this week, and then if we do, then my next target is the highest point of June of 2020. USDCAD, very quickly on this one. Today we do have a bit of data coming out from Canada. We have the unemployment figures, and yeah, that's going to be interesting to see. Currently the forecast for the unemployment rate is to decline, so that's good news. You can see that USDCAD right now is kind of pushing higher. It reached this 1.2527 territory. That was my one of my first targets after a break of this 1.2590 territory. I spoke about this throughout this whole week, and but we didn't really reach the other target here, the lowest point of February, near the 1.2468. So, but to be honest, that's still okay. If the pair struggles to get back above the 1.2590 territory right here, another slide here could be possible, and maybe then we could reach that this 1.2468 zone, the lowest point of February. And if the Canadian figures come out better and we see oil moving further north, then we could see this pair drifting to the downside, guys. So the Canadian dollar could get a little bit stronger, and yep, could reach some of these levels. But if numbers start to disappoint, then of course all eyes are on this downside line again. GBPUSD, so drifting to the downside. This is what I talked about this week. Basically, what I said, that if it pushes higher and makes its way back above the 21-day EMA, my next target is the 1.40 zone. But in order to get comfortable with further moves higher, I need that push above this 1.40 zone, the psychological 1.40. But if it struggles, then of course, yeah, we could see a drift back down. So for now, I'm still gonna stick to the same idea. I need that push above the 1.40 zone. Ideally, I would like to see the daily candle staying above it in order to kind of go for some higher levels. But for now, you can see it's drifting back down. It's not really liking also the manufacturing and industrial production figures in UK. So those all came out as huge disappointments. So you can check out the economic calendar for that. So, however, I'm going to take a neutral stand for now, because for me to maybe start looking at the downside again, at least a drop back below the 1.3888 zone is needed. EURGBP. So I talked about this pair also yesterday and the day before yesterday. Basically, the idea here was that if we get a pop above the 1.2998 zone, sorry, 1.2964 zone here, then yes, we'll go for the upside. I'll aim for that highest point of February, which is near that 129.98. We've managed to clear that, and now we're trading above that psychological 130 zone. So as long as we remain above that area, above that 130 zone, I'll stick to the upside, and my next target is roughly around the 130.87 zone. EURGBP. So haven't looked at this one for quite a while, but as you can see, so far we're still trading below this downside line taken from the high of the 21st of December of last year. And yeah, we're struggling to overcome it, but also we're struggling to move lower. We're struggling to move below this this lowest point of February, and that's roughly around the 0.8540 zone. So a nice drop below this 0.8540 could do the trick for more sellers. But for now, I mean, we're just keeping an eye on this one because we're very close to this downside line. If we get a break above it, and then we start seeing, let's say, a push somewhere above this little territory right here, the 0.8596. Now this is where it could become a little bit more interesting for more buyers. But the fact that it's still trading below the downside line, of course, this kind of creates a bit of a nervous situation for the bulls. Because if it suddenly drops below this area, below the 0.8540, and stays below that area, then yes, lower levels could be met. EURUSD. So this one's a bit of a nightmare, and the reason is that basically this is from the kind of mid this week. I said to you guys that if the downside line gets broken and the pair pushes above the 1.1952 territory, yes, it increases the chances for a further move higher, but my preferred area is still the 1.2023. So what I mentioned recently, that if we get a push above this 1.1952, yes, we'll aim for some higher levels, but we will be very, very careful, because this could easily reverse somewhere from around here, because this is not the kind of stronger point here, stronger area, the stronger breakout area. So yeah, I mean, for the upside, I'm still looking at this 1.2023. For the downside, well, first of all, get rid of this downside line, no longer needed. It got violated. So now what you could do here is, well, keep your eyes on this 1.1952. If the rate stays below this area, continues to trade below this area, this increases the chances for a bit of a move here back, maybe towards this 200-day EMA, and then we'll take it from there. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, your likes, your comments, guys. Thank you very much, and I'll see you later at my Trader's Tea time today, 13:30 GMT. For now, have a wonderful trading day, stay safe, and I'll see you later. Bye-bye.